Analysis. In today's video, we're discussing the S&P 500, Nvidia, the Nasdaq, and the Russell, and a couple other interesting points that I observed. So starting off with the markets today, the S&P did close on the daily chart at 59.12 and 18 cents, closing up 0.4%. It did briefly dip into negative territory today, which is why it's a little bit disheartening for the bulls. They kind of dropped the ball today. A lot of people sold into the Nvidia rally, dumped a lot of their calls, and the markets were under pressure earlier on. Now, what's very interesting about this daily chart is the market is still just digesting this move, consolidating in a very tight range, holding above that daily 200 moving average. You can see this blue turquoise line. I still think the indices are okay. I still think they're likely going to charge higher in the near term, and there's a few reasons for that. The SPY chart, if we go intraday SPY chart, the SPY 15-minute chart is actually showing some interesting characteristics. There's this upsloping trend line from pivot low to pivot low to pivot low to pivot low. We pierced it today, and you consolidated on it for 1 to 2 hours here before SPY ended up trying to break out and push higher into the end of the day. Now, what's very interesting about the SPY chart today, first things first, I'm going to drop it down to the 5-minute chart. The 5-minute chart on SPY is quite interesting because late in the session we had this attempt at a high volume breakout. You've actually triggered what's called a head and shoulders pattern, an inverse head and shoulders pattern, by breaking out here on the SPY chart. Now, we haven't confirmed the breakout, but it's getting very, very close in an attempting a rally to the upside. So you can see this inverse head and shoulders pattern on the SPY 5-minute chart does point to higher prices around the 593 zone if it can hold and confirm the breakout tomorrow. Now, simply speaking, I want to bring to note the pre-market high level today of SPY around that 598 and change, and the pre-market low. That was an exceptional wide range of price action. Often when price hits a pre-market high range of such a high degree and we open way, way lower, we opened over here and pre-market high was over here, price action often likes to retest those levels. So I'm leaning more bullish. I think the sell-off in the morning and people selling into this Nvidia rally and really nervous of the tweets or the posts on Truth Social by Trump, basically going against the court orders and making that post of that picture that he's on God's plan. I think he just threw a little bit of uncertainty, forced a lot of people to take profits and liquidate. And now price action has allowed buyers to reaccumulate at key technical levels where they don't feel as much the market has run away from them. So Nvidia's pre-market high is just below sub 144. And we have to admit, despite Nvidia got sold into today, it still closed up 3.25% on the session. What is this? This is a daily chart breakout on Nvidia. We haven't confirmed the breakout of this trend line, but it is looking positive like it wants to push higher in the near term. So I'm going to give the bulls the benefit of the doubt, despite they dropped the ball. What's very interesting is the IWM started out to be the weakest index in the morning session, and intraday price action, it actually had a pretty decent sized rally. But nevertheless, what's really nice about the IWM getting bought today is it's reflecting that we're still in this scenario where as interest rates fall, which is what happened today, the US 10-year yield saw this big bearish engulfing candle. As interest rates fall, market participants are still buying risk assets and buying the market higher. So I think we're in a scenario where the US 10-year yield has had a failed breakout on the daily chart as seen by this trend line. And now it's likely going to retest the daily 200 moving average. So as the market likes to press higher, I think interest rates will fall. There will be a point where market participants are pricing in too much risk, which is why they're buying bonds, but that point isn't yet. There's a lot of spread differentials that you have to keep note of, but we're just not at a point where the market is pricing in any sort of a recessionary fears just yet. So I still lean bullish in the overall markets. Let's quickly take a look at natural gas. For those natural gas bulls, natural gas appears to be trying to put in an inverse head and shoulders. Remember in my video, I said I remain bearish off of natural gas. I said this 385 pivot high zone is a short. That's what we rejected off. I think that natural gas is going to attempt at a rally, and then it's likely going to be another short. What will change my mind is if we get a breakout above this 385 level, then we could be triggering a much more bullish pattern that could take us to a pretty decent size upside move. But for the time being, I hold no position in the market in natural gas. Just some trade ideas that I'm going to mention to you people who ever tune into these streams. One of my favorite chart setups, XYZ. So SPX is looking exceptionally well. It's had that breakout out of this inverse head and shoulders bull flag pattern, and it's showing an upside of about $76 and change. You'll have some pretty strong resistance at this 66, 67 pivot, then your daily 200, but it's looking like it wants to press higher in the near term. And full disclosure, I am long XYZ. Today, my members took amazing profits on AI. We sold near the highs of the session. I did not get out at 30, but our call options for our June 27th $25 calls were greatly in the money. So this is a nice strong stock that is likely going to press higher in the near term. Other than that, thank you all for tuning in. Please give this video a big like down below, and we'll see you on the charts a little bit later.